This is the MTPredictor weekly update for January 9th, and today I thought I'd do things a little bit in reverse. I want to cover one of the setups, things that we were looking at in the trading room on Friday, and then we'll take a look at kind of the bigger picture stuff. But here I projected off this prior swing high. This was Thursday's trading. I projected this decision point here and here as potential resistance and support when the market opened. And if the market gapped up or down into one of these areas, we might be looking at potentially areas for trading. As you can see, the market did in fact gap up into our DP area. We looked for a red reversal bar, and we got it here, but the risk reward between if we entered here with a stop back here and this being our target, the risk reward was not at least 2 to 1, so we thought that would be a more aggressive play. If you're looking to get in here thinking this may be the high of the day, you'd have to have a target below here somewhere. So we figured we'd wait and look for a potential, maybe a correction here, and then a move or attempt back up into this DP area that failed, and this high holds, and then look for a potential ABC type correction, or move down to 1 here. This could be 1 or A. And the market did move back. I projected then up our wave 2 or B resistance area. This is the area we expect the market might come into and fail to make a new high here, and then we could look to short with a target, either the risk reward for our here's our minimum wave C target and our typical wave C target here. So the market's starting to move into position, and we're an area where we're anticipating we could trade in. Our trend was neutral here, and in fact we got our red reversal bar here, potential wave 2 or B. So we have to make sure that we get enough risk reward in here if we're going to short to the minimum wave C target there. And so if I enter a tick below here with a stop a tick above, and we had at least a 2 to 1 at the target there, so we're going to risk about 385 to potentially make 800, and the market did fall into place there. Now the reason we looked at the YM, the NQ, and the ES, and we decided early on that the NQ was the stronger market, so if we wanted to go short, we were looking at more the ES or the YM. If we were going to go long, if we're going to look for a long attempt, we would go using the NQ, which we felt, like I said, was a stronger market. Now as the market came down, it did take this area out. We got to the target there, and it did take the typical wave C area came into and began heading down. I've also projected down here our typical wave 3, so in case this was 1 down, up to 2, and down, we expect wave 3 in this area. And once the wave 3 is in, I can project up this kind of pink area here would be our wave 4 support. And now if we're finishing up with the short trades, we're going to be looking now, we see wave 4 may be in there. We've got our minimum wave 5 support down here, along with our another decision point support area. But another thing that we'll see will come into play as we moved along here. We came down into this wave 5, typical wave 5 support area, and then this black line down here. This is our the ATR, the average true range, the 20-day ATR for the Dow mini future, came right at the ATR. We also got a red high volume spike in here telling us that the sellers may be getting trapped and the market may be looking to reverse. But remember, I said we didn't want to, since the YM and the ES were the kind of weaker markets, we'd rather get long using the NQ. So if we look at the NQ, I've kind of got this all set up as well here. Here, same thing. The market opened, hit the decision point resistance in the NQ, fell off, came into this decision point area, wave 2 swing as well, down to wave 3, up to 4, and this set a nice plunge down wave 5 into the maximum wave 5 area. Again, Here's the NQ's ATR right to the tick to the NQ's ATR. Perfect area to go long. We had a high volume spike there, and we're just waiting. We got a first blue reversal bar. Here's another one. We can set up our trade there. We can go long with the target being the decision point off the wave 4. After wave 5, you look for the wave 4 swing, DP off the wave 4 swing, which is right here. Nice risk reward, 3.7 to 1. So software said we could go long 4 contracts, risking 400 to make potentially 1400, and you can see that followed through nicely, and in fact started following an orderly 5-wave pattern up into minimum wave 5 resistance. Boom, right there, and that was pretty much the end of the day there. So some nice setups for, you had to be using the advanced tools to capture these. The standard setups, automatic setups, you would actually lost money on. So this took a little analysis, which we do in the trading room for our clients, but they definitely did pay off if you were able to follow along there. And another thing, one of our clients in the trading room pointed out this trade in the 6C, the Canadian dollar, on the 3-minute chart. We had this significant high here, and then this ABC correction. We had an automatic sell signal provided by the software, and the trade was in this area at the time, and our MTPredictor software developer Steve Griffiths had said, you know, this was the target we'd be looking for, and we'd see on Monday, we'd come in and see if we were correct on that, and it did. It was a 6.8 to 1, nice risk reward there, risking 400 to take in 2,700. So hopefully some in the room caught that as well. And then finally, I'm kind of rushing a bit here, but we'll take a look at the bigger picture here in just a moment. Okay, here is our weekly Dow, the cash Dow here. You see we do have a 5-wave pattern up off of this prior DP correction, which like we talked about last week, was the most significant correction that we had back in for last year. This happened during July of last year. The next big correction, of course, was the big one back in March of 2009. So this is a pretty significant pattern, and we haven't quite come up to this. I've been saying there's a good shot that we'll get into that Dow 12,000 area. Haven't quite gotten there yet. We're in this minimum wave 5 resistance. We also had some decision point kind of overlapping off this wave 3 high here. We had some kind of overlapping resistance here. We had a pullback last week, but I don't necessarily, we could definitely, as we're into resistance, we could definitely have a pullback at this point. I don't know that's the end though. I still think that 12,000 is out there, that they may go for that before we get maybe a more significant correction. We'll see. And then finally, let's just take a look at, we had our trade in gold. We had an automatic TS1 sell signal in gold, and you can see that was a nice 4 to 1 risk reward there that paid nicely. And then also in oil, we'll have to see how this trades plays out now in the oil market. We had a decision point sell signal, an automatic decision point sell signal in fact, let me just clear this off here, in oil. And this one, I'm going to put the also was at wave 5. This pattern kind of a little bit in the middle of nowhere, though it will still serve as resistance. We got the automatic sell signal. That's got about a 3.7 to 1 risk reward there. Hadn't got to the target yet at this point. We have gotten our 100% initial risk line on the daily chart here, so stops can be at break even, or have been at break even for a couple of days anyway. All right, so we'll continue to watch these as oil and gold kind of correct here, and the market was off a bit last week. We'll see what happens if we get some support in here shortly next week, and probably Thursday and Friday, the bigger news days with the PPI, CPI, the jobless claims, and so forth. We'll be keeping a close eye on those. All right, hope you have a good week, and we'll look at this all again next week.